and welcome back. You're watching Buy Now Sell. Now it's a show where we get all your stock-specific questions answered, but we are in the thick of earnings seasons and we are now joined by the management of NetWeb. Now remember, NetWeb has reported its Q4 numbers. Now, the company has missed its own guidance of an EBITDA margin of 13 to 14%. It has come in at 12.4%. And on the back of that, we do see the decline coming in on the stock. It's down almost 6% as of now. But we'll get the management on board and to weigh in on the numbers and the roadmap ahead. Sanjay Lodha, who's the CMD at NetWeb Technologies, is now joining us. Hello. Good morning, Mr. Lodha, and thank you so much for joining us on ET Now.
Yeah, hello. Lodha, thank you. Thank you for your time. Yeah.
Mr. Lodha, the revenue for Q4 has seen a decline of 4% on a year-on-year basis, with the margins remaining largely stable. What has transpired in Q4? Give us some color on the numbers.
Actually, it was a very, very robust year, actually, really speaking. If you see, year on year, if you see, my sales growth was around 90%, okay? And basically, our kind of companies cannot be judged on quarter results. Actually, if you see the profits year on year has been up by around 80%. The revenue is up by 90%. And margin also, if you really see, basically, the margin is not 12.5%. I would like to clarify that. If you see, we have reported it very clearly again, the adjusted EBITDA, which mentions around 13.2 or 13.4%, which is very well within the guidelines, because that particular thing is primarily because of some reporting issues regarding some dollar fluctuation and something wherein the profit is booked in one account and the loss is booked in one account. So that gets nullified. But basically, so that is not impacting. So that hence, I think if you read the results very clearly, it very clearly mentions in the notes column. So it was, so overall, basically, it was a very, very robust year. If you really see, our AI segment has grown by more than 450%. Last year, revenue was around 1150 crores. This year, we closed the year at 2183 crores. And if you really see, we are entering the year with an order book of 2100 crores. So what more you want, actually, really speaking? Basically, so I have always been guiding at the rate of 35 to 40%. And you see the realistic growth, that is far ahead than what exactly I had guided. So definitely, we are very much within the guidelines. We are even basically, whatever we have guided, we have surpassed in all the aspects, actually. And all of our business is also growing in a phenomenal manner. If you see, basically, overall, the PAT percentage also 9 to 10% we have been guiding, and it has been maintaining that only. So basically, the other outlook, the year ahead outlook also looks wonderful, actually, really speaking, because if you see, basically with a 2,100 crore of outlook, which I am already mentioning, so I don't need to give any regions for 35 to 40% of growth, which I am projecting very clearly. So AI was around 15% of the business. That is around 43% of the business in the current year. So definitely, basically, the momentum is very high, and there is an unabated AI demand all across the world. It's not only to India. And basically, that demand is going to continue for at least 18 to 24 months. That is even creating huge shortages and all that. Though company has managed its inventory very well, and basically, so company is minimally impacted and not impacted in any way. Actually, we have been able to retain our margins and to keep our growth momentum going on. So I see this going on very well. And with the current government of India focus on Make in India and AI, definitely this sounds really well.
All right, Mr. Lodha, robust planning and the momentum is high. The stock is 6% down. So any rationale you might want to give what the street is not liking, and also an update on, the receivables and working capital, which seems to be elevated. What's the status over there, and how should we think about cash conversion and any risk to balance sheet efficiency out there?
So basically, on the stock price, I think I will not like to comment. That depends upon you guys, how you project ourselves very, very correctly to the market. I leave it upon you people, actually. But basically, as regards the business is concerned, what happens is that with the revenue, basically in the last quarter gets booked. So when it's a high quarter, then definitely you see that cash receivables high. But on the inventory side, I'd like to comment, because you know that the memory pricing and the component pricing is going up and up. So we are definitely, since you are seeing that it's not impacting much of our basically profitability, because we are adequately stocking, and plus basically we are doing forward deals, actually, so that basically our business is very well impacted, because we are not a kind of a box pusher kind of a company. We are a proactive sellers, wherein basically we spec a deal and we completely get into a deal. So in that process, we have very good visibility of what deals are going to come. So accordingly, we have to plan inventories, and the business is also growing. If you see, the base has really grown very is growing very high. So this is, I think, almost for 3 years after listing. Every quarter we have grown, and we have continually maintained our completely growth momentum. And I'm very confident that coming year also we'll keep on growing in better or similar way.
Mr. Lodha, also what percentage of your revenue growth is driven by repeat orders versus new client additions, and how sustainable is this trajectory?
Yeah, so basically you have to understand the repeat business very clearly. Actually, what happens is that for us, the repeat business, there is a lot of churn into it, because basically it's not repeat, it's kind of a refresh. Like same as basically as you buy your iPhone and there is a new iPhone next year, so customer wants to basically buy it. So basically Nvidia changes its GPUs. So currently Nvidia is previously it was in Hooper, now it was in Blackwell. Very soon the Vera Rubin is coming up. If you watch the Jensen's keynote, very clearly he mentions that if you use Vera Rubin, your performance will increase phenomenally. So definitely within 2 to 3 years, 3 to 5 years, all the customers want to change their complete setup. We really, rather than pushing him for annuity revenue, we push them for refresh revenue. That's how the industry dynamics in high-end computing works. So the same customer which we have sold this year, after 3 years, he comes back to us with a refresh. So that's basically the refresh revenue. So basically this year, if customer A is a repeat customer, next year customer A is not a repeat customer. Customer B is a repeat customer. So that's a very healthy pipeline which we have. And new customer addition has also been phenomenal. Basically, we have added more than 131 clients actually, really speaking.
All right, Mr. Lodha, that'll be all. Thank you so much for taking your time out and speaking to us today. Thanks.
Thank you so much. Thank you. Nice talking to you.
Let's move on.